Hello, I'm Annabel Brodie-Smith. I'm the Communications Director of the Association of Investment Companies, and today I'm talking to Jasmine Yeo. Now, she's the co-manager of Ruffer Investment Company, and she's going to be talking at the AIC Investment Company Showcase in October, on October the 11th. So, hello, Jasmine. Now, can you explain a little bit about the investment objective of Ruffer Investment Company? It's in the flexible investment sector, and we know that sector you've got the ability and the freedom to invest in different asset classes.
Yeah, absolutely. So at Ruffer, we have two very deliberately simple investment objectives. One is around capital preservation. Formally, that's not to lose money in any 12-month period. And then the second one is to generate returns meaningfully ahead of the return on cash. So it's really about not losing money, first and foremost, and then looking to generate a consistent positive return, and doing so crucially, whatever happens in financial markets. And I think the ordering of those two objectives is pretty key, because our approach very much starts with managing the risk of losing money first. And that's really based on the idea or the belief that the way to protect and grow value for investors over the long term is really about focusing on avoiding the large losses in markets and then trying to harness the power of compounding over time.
Well, that sounds like an incredible objective. Like every investor would want that, but how do you actually achieve it in practice?
Yeah, so that's the crucial thing, I guess. So those two objectives, the starting point being the focus on capital preservation and the possible risks in markets, is really informs how we do approach building portfolios. So as you might expect, the starting point is about identifying potential sources of market risk and then looking to buy assets and build into the portfolio things that we think can offer genuine protection against those risks. And I think it's that starting point that is what has allowed the trust to offer protection in times of market stress. And the result of that has been that the performance of the trust has tended to have very low correlation, particularly to equities, but also to other asset classes. And really, what that allows us to do, and if you can successfully achieve that first objective of preserving capital, it's a really key driver of the second objective of delivering steady positive returns. Because if you can protect in a market downturn, then it means we can be very outward looking and looking to take advantage of the opportunities that those market sell-offs present, perhaps when others are sellers or perhaps more fearful. And as you highlighted, the fact that we're multi-asset, we're unconstrained, that means we can be really flexible in what we own, and we can look to take advantage of those opportunities, sort of whatever asset class they're in. And what you end up with is a kind of a global multi-asset portfolio that tries to blend those protection and growth assets together for a range of possible different future scenarios. And it means the portfolio tends to look and feel very different to most conventional portfolios.
Yeah, well, that's a really very unique, objective and the way you go about it. I'm interested, obviously you're coming to the showcase in October. What are you going to be talking about there?
So I thought it was worthwhile focusing on what we currently identify as a kind of key potential source of risk for investors in the coming years. And that's really about a world of higher average and much more volatile inflation. And when I say higher inflation, really the way I would characterize that is thinking about if 2% was sort of the floor for inflation for the last few decades, we think that, if it was the ceiling for inflation, crucially, over the last few decades, if inflation was very subdued and very stable for a number of years, really since the early 1980s up until 2020, we now think that 2% level is likely to be the floor for inflation going forward. And the reason we focus and think about that so much is it's a very different world that's going to have some very important implications for portfolios and asset class relationships. So what I'd like to try and answer the question during the kind of the conference is about how investors can protect and diversify in a world where 2% is perhaps the floor inflation for inflation going forward. What are the opportunities? What asset classes, as shown by the data, are the right ones to own in those environments of perhaps higher and rising inflation? And I think we got a flavour of how uncomfortable those kind of scenarios can be in 2022. And arguably markets are pretty confident that inflation is now squashed. But that's also giving investors the opportunity to buy the right and helpful protective assets today at pretty attractive prices.
Okay, well, I'm sure that presentation will be really interesting for the investors attending the showcase. And now I'm just wondering, can we find out a little bit more about you? How did you get started in fund management?
Yeah, so I joined Ruffer about 7 years ago now, and I started out in our UK wealth team, and I was managing portfolios for private individuals, charities, trusts. So very similar to what I do today, but on a slightly smaller scale and with some individual nuance. And very quickly learned a lot about portfolio construction, multi-asset investing, and really how it feels to invest through volatile markets. If we remember 2017, we had a big vol shock, 2018, an almost very severe correction in US equities, and then, of course, 2020 kind of COVID crash in Q1. I started to move a bit closer towards the investment side in an investment specialist role, whereas working with our distribution team and our fund managers with the UK market. So speaking to wealth managers, advisors, family offices that invest in the Ruffer strategy. And through that kind of time working more closely with the fund managers, when the opportunity arose as part of an internal process to co-manage our investment trust after the previous manager left, I sort of jumped at it because it sort of married perfectly my previous experience, both working primarily with the UK market and UK investors, but also that experience in portfolio construction. And I've really enjoyed it, and particularly sort of the other element to the investment trust world, which is, of course, corporate governance. And that's been a really interesting thing to learn about and be a part of.
Yeah, and also working with an independent board of directors, I'm sure that's interesting too.
Very much
Well,
so.
thanks so much, Jasmine. I think we understand a bit more about you now, and we're very much looking forward to hearing your presentation at the Investment Company Showcase.
Thank you.